Okay, let's take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We are here just to tell you how BTA analyzes the market, how we look at the market. This is Rod from BTA, and we are known as the Middle Traders. This is our weekly Walking with the Market. Okay, we're going to do this every week for as long as we can, as long as God spare our life and give us health. We are going to do our weekly Walk with the Market. All right, so basically, I'm showing y'all some of the things that I do every weekend. Okay, if you go back, if you look at the videos we put up yesterday, we was talking about the VIX and different breadth indicators and stuff like that. The VIX and family and friends. When the VIX look like that, bad things happen. Okay, so these are some of the things that I look at over the weekend. Well, I do a walk with the market every weekend, and this is my process. I make sure I do this first thing every Saturday morning so I can stay in tune with the market. I can walk with the market. All right, you want to be walking with the market. You want to be side by side with the market. You want to be in tune with the market. You don't want to be too far behind, okay, because you can miss the move. You definitely don't want to be too early because maybe what you thought you saw, you didn't see. Okay, so you thought you saw something, but you ain't see it. The market showed you something different. You're moving too fast. That's what amateurs do. You want to stay in step with the market. You want to walk with it. Because sometimes I get phone calls, people say, why I focus so much on the major market indexes and the major market index ETFs and walking with the market and things. Because I keep telling you, 75% of all stocks are going to follow the major market indexes. If you can get the direction of the major market correct, if you can get the direction of the major market indexes correct, you are already winning half the battle. More than half. Okay, because you got a 75% chance of picking a pretty decent stock if you got the market direction figured out correctly. This is why we stay on this constantly. All right, so right now, this is our market comparison workspace right here. We got the Dow Jones up top, Standard & Poor's in the middle, and then we got the Nasdaq chart down at the bottom. So we're going to start out with the Dow Jones Industrial Average and see what the structural charts is telling. This is a daily chart of the Dow Jones. Now, this is not going to be hard, and it's not going to take us too long here. We got a downtrend here for the Dow Jones, right? Downtrend and trend line. Downtrend and trend line. And we got another downward trend and trend line here. We stayed within this channel for a long time. We finally broke out. Then we went on that sideways consolidation. Then we fell apart. Okay? That's obvious, right? You can see that. But right now, for the Dow Jones, we are at a very, very critical point. We are coming down and we're testing right here. We're testing. This thick red line is the highs going all the way back. The high going all the way back to March 2020. That's the high of March 2020 before we had the corona collapse. Okay? We're testing that high. We collapsed off of that high when the corona first hit the U.S. Okay? We're testing it now. We're testing it now. So we need to be very careful. Okay? We need to be very careful here because this can be an area of support, right? You don't want to try to, first of all, I told you, the short was up here. To bet against the market was up here. This is the pivot. This was already the move you should have profited from already. Okay? Granted, we had the Fed decision came in over here. Right? So understandable if you took some off and didn't want to get caught in the Fed decision. Understandable. But But now, if you start shorting now, as far as we're concerned, you're chasing the market. You don't want to start chasing, okay? You start chasing stocks, you get yourself in trouble. All right? Right now, we are at a support level here. If you try to short now, you might get your head handed to you because you might get caught in a relief rally. This market has been trading down hard. We are at extremes. And if you try to short now, you might get caught in a relief rally and this thing run back up on you. So you got to be careful. We are at a very strong horizontal long-term support level right here. Be careful, all right? This could be, if this, we would like for this to hold support, right? And then the market start bouncing and we get us a nice relief rally and maybe run back up to the highs of inverted yield curve date. Well, we'll see. I have to admit, that's a long way. That's a pretty far up. That's pretty a long way from here. All right. We'll look at that in a few minutes. But this is an area here where we would like to see support being held. All right. We break below that. Then we got this internal trend line here that held prices inside the downward channel for a long time before we broke out. So if we break below this long-term support level, we might test here. If we break below that, then it's possible you could get caught back in this downward channel again, and we could come back and test the bottom part of this downward channel, this lower downward trending trend line. We don't want to get caught in that, but it's possible. If that's the case, then it might be an opportunity to short again later. If we can consolidate around here a little bit, it didn't break. Well, maybe. Okay, well, we're going to watch the chart, see if the volume is falling out, see if momentum is turning hard to the downside. We will be watching. But let's see if this could hold support. That's for the Dow Jones Industrial Average. That's where we at, okay? Now, let's look at the Nasdaq. And remember, these are the Standard & Poor's 500. Remember now, these are the actual indexes themselves we're looking at. That was the actual Dow Jones Industrial Average. Now we're looking at the actual index itself, the Standard & Poor's 500, not the ETF. We looked at that yesterday at the end of the day. Right now we're looking at the actual index itself. So we got a daily chart of the Standard & Poor's 500 here right now. And as you can see, for the last couple of days, we've been trading off. Well, we had 3,600, basically 3,674 right now. That's where we closed at yesterday. Well, right here, this horizontal support level, this red weekly long-term horizontal support level right here, coming down, this downward trend line is coming around right through it. This is where we could come back down to. That's this downward horizontal support, long-term support level is at 3,545. We closed at 3,674. So, give or take, you might as well say about 100 points. We can come down. If we trade down to that, it's a possibility that we could come right down to this downward trend, internal trend line, and this support level. Okay? If we start trading down to that and we break that and we break through this downward trend line right here, it's a strong possibility we could come back. You see this? Do you see this big, thick red line? You see that big, thick red line right there? This big, thick red line? You see it? That is the highs going all the way back to March 2020. That's the high before the corona collapse. You see the Dow Jones is sitting right on it right now. The Dow Jones might break it and the Standard & Poor's might fall apart and come down and test it. We don't know. But I'm telling you, we better watch it. This is a long-term horizontal support level. Long-term, very strong support level. But right now, we just broke below this trend line. We got resistance at this horizontal support level up here at 3,800. Now we at 36. We might trade down to this next level right here, which is the long-term weekly trend line at 35.45. Like I said, it's about 100 points from where we at now. We break this downward trend line right here. We might come down and test the highs of March 2020. So we have to see if this is going to trade down and find support here. If it bounced, that's great. Hopefully it doesn't even trade down to it. We'll see. Maybe we could get that relief rally and this thing will run up on us. But if we trade down, I will be looking for this level on the Standard & Poor's right here, this 35.45 level for this horizontal support level and this downward trend line to be the area of interest for us that maybe we can hold support there. We break it, look out, March 2020 highs. March 2020 highs might be right there looking you dead in the face. So going long, it's not even a thought. Not right now. It's not even a thought. The furthest thing from my mind, okay? The thing is it going to consolidate sideways and give us another opportunity to go short? That's a possibility. But to go long, it's not even a thought right now, okay? It's nothing to think about. Look at the video we put up yesterday. We're trading below a downward trend of 5-day moving average. Nothing to talk about. Going up against key support levels. Nothing to talk about. Okay, so this is the daily chart of the Nasdaq. Daily chart of the Nasdaq. You see it right here? See this long-term red horizontal support level? 10,514. We at 10,700. Another 790 something. Another 200 something points, right? And then we'll be coming down and testing this horizontal support level right here. Like I said, that's 10,519. This red horizontal support level right here. We at 10,798. Come down to 10,519. Okay, so we talking about another 200 points, 200 and change. Well, that's where it's at. If that happens, then you can see here we broke below this downward trend line. This internal downward trend line, we'll break below that, break below this support level. We come down, this will be the next area of interest for us right here. This downward trending internal trend line right here. We break that, you see it. You see it? Can you hear me? You see it right here? You see that thick red line? The March 2020 highs. We'll come down to the March 2020 highs more than likely. If we break these March 2020 highs, the market is in trouble. I don't know how low it can go. If we break these 2020 highs, I don't know how low it can go. If we break through it just a little bit and test it and rally back up, that's great. It'll help support. Maybe we can get that relief rally. But if you break through it, try to rally back above it, get resistance, come back down and create a swing low, I don't know how low the swing low can go. Okay? Okay? These March 2020 highs are key levels right now. What would be nice if we can hold support here. We held for 2 days right here at this horizontal support level right here. We got back above this internal trend line. With the momentum, everything pointing to the downside right now, I'm not sure if this can hold. We will see. But if it break, we already talked about where it can go. Okay? So that's the Dow Jones, the Standard & Poor's, and the Nasdaq from a structural point of view. Looking at our trend lines, horizontal support and resistance levels. Look, March 2020 highs. Key level. Key level. The Dow Jones already sitting on it, okay? Key level. Here is our moving average chart, right? This is the Dow Jones Industrial Average, the actual index itself. This is our key moving averages. We're on the daily chart of the Dow Jones, right? And let's see, let's bring it over a little bit. Let's check it out, okay? You see, right now, the Dow Jones Industrial Average is trading below and closing below a downward trending 5-day moving average. This is a really high volume on yesterday, Friday, okay? But we know that this volume was high because it was triple witching day, right? Where all the equity options, the futures options, the equity options, index equity options, stock options, all these options expired, okay? Commodity options, all these options expired yesterday, and they had to be reset, Okay, the options contracts was expiring, so there's going to be a lot of volume on these days. But you can see prices didn't go anywhere. Okay, it was pretty much a day of indecision. You see this little green dot here on the side here? So it basically opened up, traded down, traded up. It was very, up and down swings, and then it closed pretty much nowhere. Just a day of indecision, and it was very close to the close of the day before that. So it's not going anywhere. All right, it didn't go anywhere yesterday. So right now we got a day of indecision for the Dow Jones. But the key thing is that we traded below a downward trending 5-day moving average, the white line, a downward trending 9-day moving average, a downward trending 21-day, and a downward trending 50-day moving average. You see that 50-day held as support, held as resistance, and we fell apart right there when we tested that 50-day, right? Wasn't hard to see. Okay? Ching, 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 ching. Okay? So the Dow Jones is trading down. The momentum is down. It's below a downward trending 5-day moving average. Don't chase it. Let's see if it gives us another setup and see what happens from there. This is not financial advice. So when I say don't chase it, I'm telling you what we're doing. We're not going to chase it. This is not financial advice. But wouldn't it be wonderful if it was? Wouldn't it be great if it was? But it's not. But what if it was? Ching, 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 ching. You definitely, if it was, keep you from losing a lot of money. Okay? High probability trades. Well, look, this is Standard & Poor's 500. We got our moving average, our key moving averages there. Well, you see it. You see it. If I go back to the Dow Jones for a second here. Give me 1 second. Let's go back to the Dow Jones. You see it? The Dow Jones, just remember now, the Dow Jones closed down. Even though it was right there next to each other. Okay, the open and the close from the previous day was all right there together. It closed down 38 points, just a little bit. So there's a red bar. It's down for the Dow Jones Industrial Average. But if we go to the Standard & Poor's 500, we got the similar picture. It was a heavy volume, triple witching day. All the options was expiring, heavy volume, but it didn't really go anywhere. But it closed up just a tad. The Standard & Poor's closed up 8 points. Did you hear me? 8 points, just a tad. Okay, didn't really go anywhere. All right, the Standard & Poor's closed up 0.22%, basically 0.2%. Didn't go anywhere. But the key thing is here. What's the key thing here? I know y'all know it. We trading below a downward trending 5-day moving average. We tested it on this day here. Okay. Found resistance and it kept going down. It's trading below and closing below a downward trending 5-day moving average. That's pointing straight down. We got a downward trending 9-day moving average. We got a downward trending 21-day. And look at the 50-day moving average overhead. Downward trending. Nothing to talk about. Okay? This thing is trading down, but it's already made the move. We can't chase it. All right? Now, we got our first day rally attempt right here. Friday was the first day rally attempt. You see the vertical line on the chart. You see the vertical line. That's our first day rally attempt. So we got to follow the system, right? So the count is starting. Looking for a follow through day. That's our green light to give us the green light to start buying leading stocks and leading industry group, breaking out the sound base pattern. So we got the first day rally attempt. We ignore day 2. We ignore day 3. And we start counting from day 4 and beyond, looking for the follow through day. And that's going to give us our green light to start buying leading stocks and leading industry groups, breaking out the sound base patterns. Okay, so we now have a first day rally attempt. Let's see what happens. If we break below Friday's low, then the rally is dead. But for right now, the count is on for the Standard & Poor's. And now I have to admit, and I'm going to keep saying it, I have to admit, here's the inverted yield curve right here. This is the data of the inverted yield curve. The high was 4,637. Okay, we had 3,674. You talk about 1,000 points. The Standard & Poor's 500 has to rally up almost 1,000 points to get back to the high of the inverted yield curve day. Okay, I admit that may be that's a pretty long journey. That's a serious road trip back to the top. But it has happened every time in the past. Well, here's the 200-day moving average up here. It's at 4,400. Okay, it's almost close to a G, 1,000 points up. But look, that's a long way up, I know. And it's looking kind of dim. It's looking kind of grim whether or not we can make it back there. But we'll see. Look, anything's possible in the market. And remember, when stocks start going up, they can go to the moon. So I'm not saying that it's not going to make it. I'm just saying it's getting pretty far away. Maybe this is going to be the first time in history that it doesn't happen. We'll see. Now, let's go and look at the Nasdaq. This is the Nasdaq Composite. Daily chart of the Nasdaq Composite Index itself. Now, we got a first day rally attempt on Friday. Okay? So we just got us a first day rally attempt. You see it. First day rally attempt right here. Now, but what is the Nasdaq doing? Trading below a downward trending 5-day moving average. It tested it last week on Wednesday on the Fed decision. Tested it, still closed below it. Dropped below it on Thursday. Tried to test it on Friday, still closing below it. We got to ignore this volume, triple witching day. Volume was going to be high. Okay, they had a lot of trading, option expiration, like I just said. But the thing is, we're below a downward trending 5-day moving average, downward trending 9-day, downward trending 21-day, and a downward trending 50-day moving average. First day rally attempt, granted, we start the count, looking for the follow through day. So we got a first day rally attempt on the Standard & Poor's. We got a first day rally attempt on the Nasdaq. The Dow Jones didn't give us one. Let's look at the IWM. Okay, the IWM right here is first day rally attempt for the IWM. You see that horizontal line I put there? That's the signal. That's to show us our first day rally attempt, right? When we get our follow through there, I put a horizontal green line. It's the green light, baby. Green light. We got the green light. Let's go. But we ain't gonna hit the gas and throw it to the floor. We're gonna just press down a little bit and just take off nice and slow. But that's our green light to start buying leading stocks and leading industry groups, breaking out a sound base pattern if we get that follow today. But IWM, yeah, we got our first day rally attempt, but you see it, a downward trending 5-day moving average. We trading below it and closing below it every day for the last 1, 2, 3, 4, 5, 6, 7 days, 8 days. We have closed below it for the last 8 days. We got a downward trending 9-day moving average, a downward trending yellow 21-day, and look right here. You see that 9-day cross below the 21-day? That 9-day cross below the 21-day, a lot of momentum to the downside. Look at that downward trending 50-day moving average. Okay? You see that 9-day cross below the 21-day? That's our bronze cross. 9 cross below the 21-day. 21-day cross below 50, that's a silver cross. 50 cross below the 200, death cross. Doom, doom, doom. Dead. Okay? That tells you that the trend is completely down. Right? It's dead. So right now, the IWM trading below a downward trending 5-day moving average. It really is nothing to talk about. Be careful. You see it. But we are getting to points where we're starting to now, test some very key levels. Okay, let me see if I could bring this in a little bit. Let me see if I can bring this in. Is it possible for me to bring this in? And let's see how far the IWM is from that March 2020. I can't bring it in right now. I apologize. I'll bring that up later. Can't get it in right now. That is not letting me bring it in that far. So let me see something. Maybe I might be able to change it. Let me change this to 3 years. Give me 1 second. Here we go. Now, see what this IWM look like, right? So right around here is the March 2020 high. We're not going to try to get it exact right now. Let's just put a horizontal line right here. You see that? I already knew it was there, but I just wanted to show you. You see that? You see we back below? Let me turn. You see that? We see how let's see if we can make this kind of thick so you can see it. Okay. You see that? See that yellow horizontal line? We just put that at the March 2020 highs, right? The highs of March 2020. You see we done broke it? You see we done broke it? We sitting on it on the Dow Jones. We're pretty close to it on the Dow Jones, on the Standard & Poor's and the Nasdaq. We done broke it on the IWM, the Russell 2000, the ETF that tracks 2,000 small capitalization stocks. We are below the high of 2020. If we can't get back above that, if we try to rally up and try to trade up rather and test it, find resistance and fall apart, break back down. Look, I don't know how low this thing could go. But all I can tell you is that this right here is a long-term key level, the highs of 2020, right before the corona collapse. We are below it on the IWM. Testing it on the DIA. Look, inflation is going through the roof. Interest rates is through the roof. Gas is through the roof. Companies starting to lay people off. This thing could get nasty. I keep saying that the big one ain't here yet. Y'all hear me? I say that all the time. We didn't get the big one yet. Soon we're going to get the big one. And that's when we start seeing the job losses. But before that happened, I keep saying I think we're going to go back to the high of the day of the inverted yield curve. Another 1,000 points higher on the Standard & Poor's. I know, sound like a madman, but I've seen stranger things happen. They suck everybody in. They run this thing right back up. Okay? They run this thing right back up. Suck everybody back in. Run this thing right back up to right up here to maybe the 200-day, 150-day moving average. If it don't get all the way to the high, the inverted yield curve up here, it might get mighty close to it. And boom, the country goes into recession. You see the increasing in job losses, the whole bottom fall out. And then we get the big one. So I'm just saying, be careful, all right? We are at some very key levels. The IWM has now broken below the 2020 highs right before the corona collapse. That's major support that should have held. If we can't get back above that, it's going to be problems for the IWM. The small companies going to be suffering. Maybe that's why it's falling apart now, because when interest rate goes up, when interest rates are going to the moon like they are right now, and banks start charging a lot more interest to lend money to people and corporations, who suffers the most? The small people. Is that why the IWM is falling apart right now? The market is a leading indicator of what's happening in the economy. The market reacts first. Then you hear about it on the news. That's why we got to watch the charts. We got to walk with the market. Okay, this is part one. All right, we're going to do the part two. We're going to look at the guppy. We're going to look at the fibs. We're going to look at the market breadth. We're going to go through the whole process. So this is going to be part one. I'll see you in part two. I'm breaking this up into 2 parts so it don't be too long. Hopefully y'all can watch it. Look out for part 2.